So yesterday I told you guys that if ticker symbol NVDA, Nvidia, could get above 190, then look for a run to 195. Take a listen. Now to the upside, if Nvidia can stay above support at 183, then I want you guys to look for a 2% continuation to 190. And if the stock could get above 190, then look for a run to 195. And looking at the current chart, you guys can see that my levels were very precise, because that is exactly where Nvidia stock is now being rejected. With that said, when it comes down to technical analysis, this is one of the best channels on YouTube. So if you want to know where your favorite stocks and the markets are headed next, then go ahead and subscribe to the channel. Now, after being up over 1.95% in the green, the S&P 500 is now in the red and is currently down 0.34% after getting rejected at 673. With that said, current support is going to be at 661. If this level breaks, then look for a pullback to 655. And if the SPY cannot stay above 655, then look for a pullback down to 652, which from current price would be a decline of over 1%. To the upside, if the SPY can stay above support at 661, then look for a run back to 665. And if buyers can get the ETF above 665, then look for a run back to 673. Above 673, the next target to the upside is going to be at 680, which from current price, we will be looking at an increase of over 3%. Overall, I am bearish and I'm looking for a pullback down to 574 and then a pullback down to 532. Now, Ray Dalio says that we're definitely in a bubble, but that doesn't mean you should sell. Take a listen.
Ray Dalio is with us. Good morning to you, sir.
Good morning.
So you've been providing lessons for us for a very long time about economic cycles and where we are and what's going on. The big question in the market right now, because we're looking at Nvidia this morning, and I think a lot of people are waking up thinking, where's the market headed next, has been this question of an AI bubble. And curious where you ultimately come down. Are you with Jensen Huang, who says he doesn't see it that way, or do you see something else?
There's definitely a bubble in markets. Bubbles, what is a bubble? Right?
Okay, what is a bubble?
What is a bubble? A bubble is that there's a lot of creation of wealth from various ways, such as you decide that you're going to have sell $50 billion worth of stock and value it at $1 trillion, or you have multiples like that, and then you create the wealth that way. And then the question with all this wealth relative to money is who needs the money. So it's a matter of who the buyers and sellers are. For example, if we had a wealth tax,
right,
or if you had a tightening of monetary policy, then there has to be the selling of those assets, so in order to pay those things. So there's a mechanics of who owns it, is it over-owned, and so on. It's not the long-term duration of the earnings. So you think about it, isn't it interesting that we have such a short-term reaction? It's great that what the results are, but this is it's valued as a long-duration asset. So for 25 years, the next 25 years, it's very unknown. We don't know what's going to happen, and bubbles don't happen because of good estimates of what in the future. It happens because of the need for cash. Do you sell that asset? Do you have to sell that asset for cash for some reason?
Well, that's the question, though.
So your book, I thought, did such a good example. I mean, I thought, by the way, your book is fabulous.
Oh, thank you.
But you take the 1929, and then you say, what made it go up and what made it go down? And that dynamic is the way bubbles work, right? And so if you take who has exposures, how much leverage is used, and so on, this is about 80% into a bubble that was 100% would have been 1929 and 2000.
So how much leverage do you think is supporting all of this? Because we were talking to Hartz-Nevelis in the last hour, and she was explaining this idea that Jensen Huang doesn't see a lot of the transactions that he's been doing. We've talked about these circular transactions where he's effectively taking an equity stake in some business, and that business is then committing to buy his chips, if you will.
Yeah.
A form of vendor financing with sort of a equity overlay, maybe, is the way to think about it. Do you look at that and say that's a problem? It's not a problem? Should we think about vendor financing in a different way? That was something that got a lot of the fiber guys in trouble in the late 90s, for example.
Yeah, I think it's an issue, but I don't think it's the main issue. I think the real issue is who owns the stock.
Okay.
Is it in strong hands? Not just one stock.
Right.
Isn't it amazing we're talking about one stock for the stock market bubble, and we're talking about for the economy bubble? So you have such a small percentage of the economy, such a small percentage of the American population in terms of wealth and so on, concentrated, and everybody in it, and in a leveraged way. In various ways, it has leverage.
What are strong hands? How would you define that?
Weak hands would be the public.
So retail investors are weak hands.
Right.
Strong hands are the owners of these companies.
Right. In other words, strong hands is.
Now, going into the rest of the video, I have some important levels for you guys to watch on ticker symbol MARA, Mara Holdings, and Apple, ticker symbol AAPL. Let's begin with Mara Holdings, ticker symbol MARA. So with Bitcoin about to bottom, this stock is going to have a lot of upside. And to be specific, my target price is going to be at $17 per share, which from current price, we would be looking at a return of over 61%. With that said, current support is going to be at 10.33. If buyers cannot keep the stock above 10.33, then I want you guys to look for a 7% pullback down to 9.83. Now to the upside, if Mara Holdings can stay above support at 10.33, then I want you guys to look for a 6% run back to 11.29. And if the stock can get above 11.29, then look for a run to 12.47. Above 12.47, the bull's next target to the upside is going to be at 13.68, which from current price, we are looking at a return of over 29%. The next stock is Apple, ticker symbol AAPL. So current support for Apple, as you guys can see, is going to be at 265. If the stock cannot stay above 265, then look for a 4% pullback to 258. If 258 breaks, then look for a pullback down to 252. And below 252, the next target to the downside is going to be at 246. And with that said, for Apple, I am overall looking for a pullback down to 240. Now to the upside, if Apple can stay above support at 265, then I want you guys to look for a 3% run back to 276. And if the stock can get above 276, then look for a run to 280, which from current price, we will be looking at a return of over 4%. Alright guys, if you enjoyed today's video, go ahead and leave a like, leave a comment, and let's get this video out to more viewers. Also, if you're currently watching and you're not yet subscribed, do consider subscribing. As always, thanks for watching, and I'll see you guys in the next one.